Hi folks, let's try to uncover the truth about real estate investing. Today we tackle the popular misconception, cash is king. Well, it's not in real estate. Stick around and I'll break down why equity and long-term growth matter more than chasing short-term cash flow. If you're into buy, rehab, rent, refinance and repeat, or high-risk deals, you'll want to hear this. In real estate investing, many rookies start with the dream of living off cash flow, imagining rent checks pouring in month after month. But here's the truth. Real wealth is in equity, not cash flow. Cash flow might cover short-term needs, but it won't make you wealthy. Your long-term gains will come from property appreciation and paying down debt. Take it from experienced investors who've played the game for years. If you focus on good quality, B-class properties in stable areas, you're building real wealth. Let your tenants pay down the mortgage, and over time, you'll see your equity grow. High cash flow often comes from risky C-class properties where maintenance is high and tenant quality is low. You might think you're raking in the rent, but those properties drain your time, energy, and bank account with constant repairs. Even investors who make money with cash flow often manage these properties themselves to cut costs. But in reality, they're just saving on maintenance, not actually profiting. Let's talk about buy, rehab, rent, refinance, repeat strategy. Sounds amazing, right? Infinite returns. But here's the catch. That kind of strategy is complicated. It requires market knowledge, construction skills, and excellent financial relationships. Most new investors underestimate the risk and complexity. Even if you're experienced, expect to leave 15 to 25% of the deal in the property, especially after major upgrades. Infinite returns? Unlikely. The real goal should be long-term equity growth and reduced risk. Here's what successful investors do. They play the long game. They buy properties in good neighborhoods where values steadily rise. These investors aren't chasing cash flow. They're holding on to properties and watching their equity grow over time. And remember, you don't need high cash flow from day one. Let the rent cover your mortgage, slowly build up your reserves, and wait for appreciation to boost your wealth. Take an example from Buffalo, where a seasoned investor focused on B-class properties. He found the stable tenants, steady rent increases, and equity growth over 10 to 20 years made him far wealthier than quick cash from high-risk rentals. Cash flow still matters, but treat it as not your primary goal. You need enough to cover maintenance, property management, and unexpected costs. But if you're living off cash flow, you won't last long. The real key is building a strong equity position. Use cash flow to hold on to properties longer so you can reap the rewards of appreciation and debt paydown. Many new investors think cash is king, so they make all cash offers to win deals quickly. But the real truth? Cash may help you close deals fast, but it doesn't build wealth. Wealth comes from leveraging other people's money, using mortgages to buy multiple properties and letting tenants pay off your debt. Sure, you can offer cash for a deal, but holding equity over time will always win in the long run. So, is cash still king? Not in real estate. Equity is king. Don't fall for the quick cash flow dream, especially if you're just starting out. Focus on buying solid properties, holding on to them for the long term, and watching your equity grow. That's how you build real wealth in real estate. Leave a comment below if you've been chasing cash flow or if you're focusing on equity. Let's keep the conversation going. See you next time.